So what are some of the things that you can do within your accounting and finance organization to help you be prepared, not just to prepare, but be prepared for a fundraise? I think to Rob's point, you never know when an opportunity is going to present itself. A strategic may come knocking on your door, and you want to be ready. So one of the things that we really encourage is establish rigor from the start. Build the foundation of your accounting and finance organization to support your growing organization as early as possible. Waiting until you're ready to raise money is going to potentially slow down the process. It could be an obstacle to getting funds in, as Rob pointed out. So really get that rigor in place from the start. And so what are some of the things you can do to establish some of that rigor? Well, one of them is really understand the skills of your team members. Getting back to, there's a day, I think, that a belief that, kind of accounting was that back office function. We're putting beans in buckets, we're paying bills, and we're invoicing customers. Accounting and finance really needs to play a really strategic role in your organization, because they're the ones that provide the information to the organization, both how you've performed and help you project how you believe you're going to perform so that you can make good decisions about your business. So having appropriately skilled people in your organization, whether it's as employees or through an outsourced resource, is really important from the start. So you start generating good financial data, you have good information coming in to make decisions about the business. The other piece that we really encourage is implement systems to support your accounting, things like contract management, revenue recognition, and metrics sooner rather than later. Otherwise, what ends up happening is your finance team ends up spending all of their time really just cranking numbers. And so leverage tools that you can to do systems work so you can free your people up to really do good analysis and provide good insights into the business in terms of what do these numbers really mean. Additionally, using good systems usually then supports all the detail that you're going to want, both from a business understanding and business decision-making, information about your customers, your cohorts, your metrics. And it's also then good data for investors. It actually instills confidence in investors to be able to show them really sound data from good, reliable systems during the process. The next one always feels like a little fundamental, but we work with companies, $50 million companies that aren't doing a monthly accounting close. Do a close. This is how you get good, reliable financial information on a historical basis. Book your entries, reconcile your accounts, publish your financials, and then close the period in your system so those numbers don't move, they freeze. If you have good rigor over your close process, then you're going to be able to generate good historical financial statements on demand when needed. And again, to my earlier point, move to GAAP sooner than later. Eventually, you're going to have to get there. Investors want to see GAAP financials. It's good to have good GAAP trends. And it's a heavier lift, and it just costs more to kind of convert after the later you go in your business. And then finally, set up your accounting systems to support your needs and your reporting requirements. We went back talking about the kind of the presentation on the P&L. Set up your accounting systems so they capture that information that way. We encounter a number of companies, like, for example, in their QuickBooks or the ERP systems, that aren't using departments and other dimensions to really tag their information so that they can summarize and report their financial data in a meaningful way. So really think about how you're going to be reporting and make sure that you're setting up your systems to capture that information and report it out.
This is awesome. I think this slide is so great. And I'll echo something Kari said, or expand on it, that accounting is thought of as sort of back office or a cost center. And this slide and experience of working with companies is that it can be far more costly to have poor systems and poor data when you go raise or sell. It could cost you tens of millions of dollars, literally. Whereas if you start this early, and not even that, like, let's just say sort of operationally, like she said, moving to GAAP, right? That could just be a huge lift and be a big time suck and take months and months to, when you finally do it, and you've got to go build your deferred revenue schedules. And if you'd just been doing it from the start, it would have been that much easier and would have been free, right? So even on just sort of a day-to-day cost, it can be more expensive, not to mention when you go sell or raise money, it can be very costly to have poor systems and processes. This is great. Thanks, Kari.